So let's have a look at the electric vehicle market and the companies involved, mostly the Chinese ones like Xpeng, BYD of course, which is the biggest Chinese electric manufacturer. And then we have Tesla, NIO and Li Auto. You see that specifically NIO is not doing that great. I mean, it's really going down quite bad. The price to sales ratio is quite cheap, but yeah, stock is not only been going down over the past few weeks, it's actually been going down over the past 3 years. So it peaked in 2021, early in January, and ever since it's been 85 to 90% down since then. But anyways, we are here for the long term, so let's have a look at the deliveries. Going onwards, I'm gonna try to cover the deliveries every other week just to balance out the inaccuracies in that could arise in any specific week. But we can see here that the first week Tesla was not doing that great. I mean, NIO was almost at the same kind of level as Tesla. And then Xpeng was really bad. Li Auto was definitely coming down from the numbers that we've seen by the end of 2023. I mean, those numbers were anywhere from 6, 7, 8,000. And then BYD in the league of their own, they are just so quickly growing. And then Ito. Now, I'm not looking at Ito specifically, to be honest, but yeah, those 5 first. But I thought it was interesting with these numbers that they show, that maybe we should have a look at them. So you can see that NIO in the second week wasn't doing that great, to be honest. Tesla went up a notch, almost double in it, but NIO and Xpeng doing really bad. And Li Auto, again, gaining some pace. So, and you can see here at the total deliveries for this year that, yeah, NIO is still much better than Xpeng due to mainly the first week in this year. And Tesla is around double than NIO, and then we have BYD in league of their own. And then one thing that's interesting, in my opinion, is always to have a look at the lithium carbonate price, because this is one of the main components going into the battery prices. And again, we can see that the prices have been going down quite a bit. So this is a good sign for the parts of the manufacturing cost of the cars. So yeah, I think this definitely will help some of these companies, or all of them, but it might actually help the gross margin for NIO and Xpeng quite a bit. Obviously, we're only in the second week of the year, so still I would like to see like at least 5-6 more weeks to see a more balanced data. I don't think that these numbers this week is anything to be scared of, in my opinion. It's just like we've seen a few of these weeks over the past few years, like when suddenly something happens in the market and the deliveries goes down quite a bit in China. So I don't think you should put too much time into just 1 week. I mean, if we see this continue again, like we saw with NIO and Xpeng last year in the first 2 quarters, then you should be worried. But for 1 week, I don't think you should worry about this. But it's good to be aware of the numbers anyways. In my opinion, this video is very interesting in that sense that we know that the demand is definitely out there for the electric vehicle. I mean, we've seen the increase in sales numbers quickly going from less than 1 million cars totally globally to now we are basically sitting at 10 million or 11 million cars. And yeah, the projection is that this will continue to grow quite a bit. And we know that globally the sales of cars is around 90 to 110 million depending on the year. So there's definitely an inherent demand out there. Now the problem is that the demand could like be different from year to year. And as you remember that you can see from NIO when the stock price was at these kind of levels. Now, why was the stock price so elevated? And not only for NIO, you can do the same thing for Tesla. So let's go to Tesla and you can see that, yeah, the peak was also again in 2021. So let's have a look at the others. Let's have a look at Xpeng. Yeah, same kind of thing, same kind of story again. And again, this also is not only related to electric cars only, it's also like on the other stocks like the semiconductors like AMD and Nvidia. But the point is that, yeah, so we could see that the stock price was at an elevated level in 2021. And back then in 2021, we could see articles like this. So the lead time for EVs, I remember that I was new at my job and I'm working in a sales organization. And at the time I was trying to order a new Tesla Model 3. And honestly, I think the waiting time was something like 9 months, or in some cases even almost a year. And this was the same for Kia and all the other electric car manufacturers. And this is like just in late 2022. So this also makes the opportunity for all the sales sides, so basically the dealerships and also the car manufacturers in themselves, to increase the prices and maintain really good nice margins. And we could also see that it's around these kind of times where Tesla and the other manufacturers had like insane margins. Like I remember looking at the earning reports each quarter at this kind of time, where Tesla would have something like 30% gross margin as a car company, which is, it's really crazy, to be honest, to think about it that way. And since then we know that the lead time has kind of gone down, and we've been helped a bit, as I showed you before, with the price of the lithium carbonate going down. It's good in that sense. But again, I think the biggest issue has been that the lead time and the pricing issue and the price wars. And you can see that all other car companies in China and in Europe are trying now, whereas they could increase the prices on the electric cars a couple of years ago, now they have to reduce the prices. And we just saw last couple of days that NIO again decreased the price of the car, despite they already been doing that basically the entire 2023. We could see that from the early 2023 at all the car companies starts to reduce the price of the cars. Tesla, I mean the Model S got a hefty price cut by like totally, I would say at least a 15-20% from the peaks of 2021. And those kind of price cuts will obviously eat into your margins, and at some point these margins will show in the earnings and in the stock price. There's a lagging effect to that, and in addition to that also we know that the inflation has been going up, has been elevated, especially in early 2023, since it started to increase pace in mid 2020 or late 2020. We saw the increase there, and this is for Eurozone, and I think we could say the same thing for US and a lot of other markets like Australia and Canada and so on and so forth. So, but also the interesting part here is that we kind of see that the decrease in inflation now, same again in Europe, and at some point central banks are going to start to cut the interest rate and the consumers will be back stronger. So maybe by late this year I expect a stronger consumer market and stronger also larger volume of electric vehicle sales, which would kind of remove the pressure in terms of any further price cuts from all these companies. And probably by, I would say, if you're patient, maybe by 18 months from now, maybe we could see strong consumers coming back, and maybe the car prices will stabilize or even increase a bit. And in the best case scenario, the lithium carbonate prices will still be down here, or at least not up here in those elevated levels in 2022 and 2023. So this would, in my opinion, give a really good opportunity to look at all these electric vehicle companies in terms of stock price. I mean, NIO's price to sales ratio, it's something like 1.5 now, and the entire market cap is 13 billion, and they have something like 8 billion cash on hand. So if I was the management at NIO, I would look at, maybe, I mean, if you take even like 3 billion of those 8 billions and do some stock buyback, you could definitely affect the stock price by quite an insane amount. But again, the CEO Li Bin is mostly like, he's looking at an engineering point of view, but you could also say that they should have a look at the stock price, because if they would, let's say, buy back some and the stock price would go up a bit, and then they could, again, in that case, if there's any need, they could obviously dilute any further if there's need for that. So I think these are the discussions that we will probably see sometimes in the future, because there's a lot of noise out there where people are basically saying that the stock price and the market cap is too low now for a company with, I mean, again, like, look at these numbers here. You can see that so they went from 40,000 in the blue, from, if you look all the way from 2020, and then they are now at least at 160,000 cars this year, or sorry, in 2023, and then expected to sell like something like 230 to 240,000 cars in 2024. So in my opinion, all of these basically points to that there's good companies to be had at these kind of prices, especially the Chinese ones, we know that all the Chinese stocks has been going down for the past 2-3 years. So in my opinion, if you're patient, and especially in NIO's case, I think they have, 8 billion, 7 billion cash on hand, and the gross margin is starting to return, and I think the consumer is starting to get slowly back. I think NIO is more safe. Xpeng, they have less cash on hand, so it's a bit more difficult, risky in that sense. But I think NIO is, it could be a good bet. But again, this is not investment advice, so I'm just sharing my ideas with you. So yeah, thanks for watching, and please come back in a couple of weeks, and I'll have an update on the week 3 and week 4 of January, so the first full month of 2024. And thank you for watching, and subscribe, and see you in the next one.